Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
Hello everyone, it is Polar here, the CMO of Seasonal Tokens. Welcome on another episode of the Seasonal Tokens Podcast. And today we have another special guest. We have Mark, who is a crypto trader, analyst, and also an author. So welcome, Mark.
Thank you very much. Happy to be here.
Thank you very much for accepting my invitation. So there are a lot of great things that we are going to talk about, and I'm sure that people will be very excited to hear your point of view about these questions. So let's start with the first question. Can you introduce yourself with a few words?
Oh, yeah, absolutely. I would say I'm a fairly long time in crypto. Originally, I got fascinated with it because I was very much a promoter of gold and silver, independent money, basically, decentralized money, you might call it. And unlike a lot of people who were gold and silver traders, I was very much supportive of Bitcoin because, I know you're in Europe, but if you were to try to travel to the United States with a pocket full of gold or a pocket full of silver, you'd have a very hard time. You might not even be able to get on the plane without them stealing it from you, basically. So I was very much a promoter, very much interested in it. And then I did a consulting project where I wrote a book, one of the early books about Bitcoin. And from then on, I was completely on board. I thought it was something that was going to change the world. And I would say that it largely has. And I made several predictions in that book that were outrageous at the time. I don't know if you were in Bitcoin around 2011, 2012. Were you involved with it at all?
I wouldn't say so.
Okay, that's fine. I was. And Bitcoin, there was a company called Mt. Gox, which I'm sure you have heard of. Mt. Gox was one of the original Bitcoin exchanges. And at the time, they were the biggest one, and everybody was trading through them. And Bitcoin was sloshing at a low of probably $25.50 all the way up to $200. And I made the prediction in the book. I said, Bitcoin will outperform every financial asset from this point forward. I also said that at the time when Bitcoin was at 200, I said it's going to drop fairly precipitously, and then it's going to bounce back up and it's going to go far higher. And back then, I had calculated that Bitcoin had a minimum target of $81,000. Which was just, in fact, the editors of the book wanted to pull all of that. And I said, absolutely not. It's staying in the book, or the book's not happening. Well, all of that pretty much turned out to be right. We didn't quite hit $81,000, but we will. We're not hitting it yet. We haven't hit it yet, but we came so darn close. And all those predictions happened. Mt. Gox also disappeared. So basically, I would say that I've been in crypto early. I was a commodity trader, financial advisor. So I was looking at it both as sort of a financial vehicle, but also socially changing vehicle. I mean, it suddenly gave the rest of us the ability to control our money in ways that we never really had. And so, look at the explosion of creativity in the currency space and what's become with DeFi and with, getting yields you couldn't get pretty much anywhere else in the financial sphere. So it's been tremendously exciting to see the development of the crypto space. And I was fortunate to be involved in consulting with a lot of different crypto projects, and also setting up an advisory so that I could help people trade in and out. Because even though I'm a big promoter of crypto, I am well aware of the risks of it, both to the downside and to the fraudulent aspects. And so, I figured I would help people who they want to make a lot of money in it, but they don't really know what the dynamics that drive the market are. And so that's been my focus for many, many years at this point.
Really nice. Yeah, I know about your book, and we're definitely going to talk more about it because there are some interesting things that you have mentioned in it. But before that, I'm really excited to find out what has actually made you to move from the commodity trading to the Web3 world.
Well, that's an interesting question. I really didn't think of myself as moving from commodity trading. I still consider commodities to be the driver of the world, and gold and silver. We're in a particular time now where it's an unusual correlation between Bitcoin and gold. they've begun to march along, which I think is really the original intention of Bitcoin was exactly that. It was gold that couldn't be confiscated, basically. And so I'm 100% a believer in gold and silver for certain things and 100% a believer in crypto. In fact, I can summarize it this way. Crypto is for transacting in the digital space and moving money. Gold and silver, and if you want to, trading, better be very skilled on your own or at least take advice from somebody who's skilled, because most people that I know, either they hold and they go through periods where they get wiped out, or they have good skills at trading. But anyway, so crypto has its sole use. I don't see crypto in general. I don't see crypto as like an insurance policy, a long-term hold, through thick and thin, because, well, let's take it, for example, Puerto Rico, or what's happening down in Florida right now. Puerto Rico or Bangladesh. 140 million people are out of power. Do you think they're doing a lot of crypto transactions in Bangladesh without power? Probably not. I mean, maybe it's possible. Certainly with gold and silver, you could if you wanted, and not necessarily gold coins, but like in Russia and in Eastern Europe, sometimes they'll use chains where they can cut off little links, so they can do pretty refined transactions, gold and silver. But so crypto, I think, has got an absolute use. It's just it's not something that is going to withstand through a war or something like that. And unfortunately, that's a reality in parts of the world. So we have to deal with that. I say crypto is a critical part of virtually everybody's, or it should be, I think, virtually everybody's financial game plan, if you want to call it. But I still am heavy into, probably in a week or so, I'm going to be buying more, gold and silver, because that's one way I think everybody should save some money. And in Eastern Europe, how often have the currencies been inflated into nothingness? Czechoslovakia, just completely wiped out. Weimar Germany, all of Venezuela these days, throughout the world. Crypto is just another fantastic tool in our toolkit. That's the way I view it. I'm not religiously, no matter what, addicted, saying crypto is the only way. I'm not like that. I'm very rational about it, and I think it's great. I just don't think it's everything. Let's put it that way.
That's a really interesting perspective. I'm definitely hearing it for the first time. And it is somehow opening that there is actually another world, not only crypto, right? So as far as I know, and you also mentioned it, you have a book about Bitcoin. And if I'm not wrong, you have a co-author in this book.
He was the editor. I wrote the book and he edited it. Yeah. And he did a good job. I think they took out some things that I would rather not take out, but that's fine. They were paying me the right to book, so I'm happy to have done it. That book is completely useless now, and I wouldn't recommend it to anybody. At the time, I was just at the leading edge of people beginning to learn and discover Bitcoin, because I started writing it, might have been late 2011, and it was issued in 2012. There wasn't a tremendous amount known about Bitcoin. Not very many people knew it, but the book made some radical predictions that nobody on the planet was making, and that is the real value of the book. If people accepted those predictions, life-changing wealth. They made more money in a shorter period of time than any other asset ever on the planet, basically. Better, it was basically better than Amazon stock, better than lots of different situations. But that was the primary value of the book. Today, the book is worthless, or even probably 5 years ago. I tell don't ever buy that book. It's a waste of money. If you want to learn about Bitcoin, do it online. Don't go into it. But the predictions in the book were that was worth 1,000 times what the cost of the book was. I mean, most people wouldn't have believed that. I was 100% behind it. I went into Bitcoin, and obviously it worked out well. But yeah, the book is, I'm glad I wrote it. It got me into the space. It helped some people, but it's definitely not the book for anybody to pay any attention to right now, because it's just, the information's all old. Everything has moved so much faster. I didn't think about things like Ethereum. I knew it was going to evolve. I just didn't know precisely how it was going to evolve. And I bluntly speaking, I was more interested in what the eventual value of Bitcoin was going to be, rather than smart contracts and smart money And I knew DeFi and things like that could be down the line, but it was so far beyond what we really could imagine at that point. I didn't pay much attention to it. The focus was how can we make money off of Bitcoin? And basically, what's happened is that basically the old world, the legacy world of fiat currency is being sucked into the new world of cryptocurrency. Unfortunately, crypto is also being sucked into the legacy world of the fiat currency, where banks are now working with crypto and things are becoming much more centralized. And I knew that that would happen at the time because back then, one of the debates was, should crypto adapt to become regulated and centralized and work with all these big companies? And a lot of people were rubbing their hands together going, yes, if we do that, then we'll get all this Wall Street money. There's a certain amount of truth to that. And I said, I was absolutely 100% against it then. I'm 100% against it now. The whole intent of crypto and Bitcoin was to do away with that centralized control, do away with the government regulation. I think we've lost the battle to a certain extent, to a large extent, but nonetheless, we have some more freedom than we did in the past. Like, for instance, I don't think we should need KYC, AML for anything. Know your customer, anti-money laundering, none of that. We shouldn't be such a hassle to sign up for all these exchanges and fiat on and off ramps, but it is. So, and a large part of it's the United States.
Yeah, maybe it's different from country to country, but what you're saying is definitely happening right now. But I think that you are the first author of a book that is saying, don't buy my book, which is really nice. I think that when you are writing something and you know that it is not valid anymore, you should better not advise people to buy that book. Otherwise, you will get more trouble than actually benefits if you're pushing people to buy. It doesn't matter if it is a book or if it is a course. So I think that you're a wise man. Okay, so what you're saying about the current situation with Bitcoin and the battle that is going on is something that we are experiencing, and I suppose we are going to experience in the next years. But I'm really curious to find out, was there anything that you learned more about Bitcoin and cryptocurrencies as a whole while you have been writing your book?
Oh, yes. Yes. And this is one of the reasons why I was selected to write the book, because essentially what I learned was, and why we don't firmly know who created Bitcoin, is because there is a long history of people who invented alternative currencies. I'll pick one, for example, one that was called e-gold. It was created by a doctor out of Florida. I did business with them for years. I used e-gold. I bought e-gold. I bought e-silver. I moved the money around, and he was thrown in jail. Now, it was a bunch of complete baloney, invented charges. It's being used for drug laundering. Guess what's the number one currency used for drug dealing in the world? The US dollar. So, whatever invented crime they wanted to come up with, they did, and they threw him in jail. He's an example. Then there's Bernard von Nothaus, who the Liberty dollar, which was a silver dollar, and they were claiming that he said that it was US dollar, it was not a dollar. I mean, on and on and on, multiple people. And so I learned really the same things that the authors of BTC, the creators of Bitcoin, do. That if you are associated and the creator of some alternative currency that challenges in any way, shape, or form fiat currencies, you better move your operations to the moon or something, because they're coming after you. So that's why they're hidden, and they needed to be. And I knew that, but I hadn't really known the details. And then I learned all about the different evolutions towards it. There was digital money and a couple of different evolutions, and what the problems were with those. And ultimately, the problems were all that they were centralized. You had to, in a very distributed fashion, in part for the security from the state apparatus, from the governments coming after you. If it was 100 or 1,000 servers, they really couldn't easily tackle it. But if you ran it on one server or two servers or something like that, then they knew who it was and they'd go after you. So that was one aspect of it. And the other aspect of it was that by decentralizing it, it also made it, to a certain extent, the people's money. Everybody could participate. So I learned the real nuts and bolts of why they developed it the way they did. And I mean, ultimately, there's some decisions that they made when they developed Bitcoin that I didn't think were particularly good ones. And I knew at the time that the algorithm that they were using was going to become so difficult over time. It was going to eat up a tremendous amount of energy. And I was a miner. I went into mining for a period of time and I got pretty big in it. I had multiple servers and I was doing all the, and that was back when the coding was kind of, you had to actually manage the miners yourself and Linux and, learn all kinds of things. It was a lot of fun, but it was also unstable and the energy cost was through the roof. And so I knew that was a bad idea. It still is a bad idea. Moving to proof of stake has alleviated some of that, but proof of stake has its own issues in certain ways. But yeah, I mean, that's what I learned. I learned that if you play in the waters with the sharks known as central banks, they are going to come after you and try to throw you in jail. And so, just today, I was reading about some guy generating NFTs, just artistic NFTs. And now the Securities and Exchange Commission in the United States is going after him for selling them as though they're, quote, securities. He didn't make a promise that he's paying a yield. He didn't make a promise that they would go up in value. He's just selling an NFT saying, hey, if you like this crazy looking NFT, buy it. If not, no big deal. They're going to try to throw him in jail. So I got a reality check on how serious it is to try to do business. Just try to sell something that is competing with a central bank, some monetary authority. And I have to say, I'm very thrilled how successful DeFi has been, where you don't know necessarily, I mean, you can find it out, some of the teams behind these DeFi projects. And that's intentional. That's intentional. Believe me, these people would love to have the ego satisfaction of everybody knowing they developed it. But they wouldn't want to have that ego satisfaction while sitting in jail somewhere. Or in prison. So I'm glad to see that a lot of the developers, a lot of the projects have been able to bypass some of this and still continue to sort of liberate the concept of currency and investments and yields. And in fact, we have a huge, huge change coming up soon. I don't know if you heard of, what's it called? eBit or Eurobit or something. Anyway, it was a company, I think it was based in Canada, that had come up with a blockchain that would basically take away some of the stock market certificate interchange, where basically Wall Street controls all the stock market certificates. This company was going to do away with that, which, of course, it's a legacy, ridiculous system. Guess what happened? They were thrown in jail, basically. I mean, so it's still happening to this very day. Literally 2 or 3 days ago, I read about it. It's a very, very real aspect about it that a lot of projects, they don't want to address how serious it is, trying to step on the big bankers' toes, basically. So that's one of the things I learned.
Yeah, I'm happy that I haven't learned it through the bad way of going through jail, right? So by researching is much better.
Yeah, exactly.
So like you said, you have been in crypto since 2011. So what are the positives and the negatives? When we talk about differences from 2011 and today, when you compare these two times?
Yeah, I would say the positives have been the development of things like cross-chain exchanges, atomic swaps. I think that's huge. I'm pretty amazed that they actually are able to get that to work. I think high-speed cryptos, I think Monero and zero-proof coins are really amazing technology. And I think Monero's, that may be the way things have to go, because originally people were saying, oh, Bitcoin is completely anonymous. And I'm thinking, it's so unanonymous, it's ridiculous. It's completely trackable A to Z, unless you know what you're doing and you can go through some washers, and even then you might be able to be tracked. And so I think there were some preconceptions about crypto that were just technically invalid. And now those preconceptions where you can have full security, to say enhanced security, those are valid with certain coins. So I think that's really exciting. I think the DeFi space is absolutely exciting. Now, I do want to mention something, a project. I'm gonna talk about a project real quick. You didn't ask me about it, but it's related to this. So I'm working with a project called Treasurenet.io. And the basis of it is this, that the entire crypto space is essentially divorced from reality. How do I say that? What do I mean? The best currency that was originally in the world was gold and silver, metals. And of course, there was a period when salt was a currency and all kinds of different things. There were periods where certain sticks were currencies, things like that. But gold and silver for a long time were currency. Well, what that did was it kept prices fairly stable because gold and silver could only be mined so quickly. That economic activity of creating gold and silver basically tracked with the economic activity of all the things you would buy with it. So inflation was kept in check. Well, Treasurenet IO does basically that. It doesn't mine gold and silver, but it only produces or gives block rewards in a currency called unit at a rate of, when it's starting, it's just going to be oil and gas wells. But then it's going to go to Bitcoin and Ethereum. It's going to track that. It's also going to track gold and silver mining. And it's going to create a currency that is tied to economic activity, real world economic activity, unlike all other crypto. All other crypto is basically divorced from economic activity. And it's going to be a very interesting crypto project. And eventually, it'll be able to, it's programmable as well. So it can do all kinds of things in the DeFi space and all that. But that's one of the projects I'm involved in. And that's one of the most exciting aspects about crypto, that it's beginning to really impact day-to-day lives in certain ways. Like in Europe, when I was traveling in Europe and Paris and Germany, there were entire towns where Bitcoin was accepted almost everywhere. Now, I personally don't like dealing in Bitcoin. I find Bitcoin to be a pain in the rear. It takes a long time sometimes. I've had transactions that didn't clear for hours. So not a huge fan of Bitcoin. I appreciate it for what it is. But some of the other ones like Dash is pretty quick. EOS, Litecoin, those things like that, or ETH is pretty good if you're not paying a fortune in gas fees. But these new projects that are coming out now, built on the more advanced, like Solana, which is fast as lightning, Avalanche, built on these really super high speed, low cost protocols. I think we're getting to the point where it's getting easy, it's getting fast, it's getting secure. And I think the only thing lacking is price stability, because if your Bitcoin is 65,000 and then all of a sudden it's 19,000, you can't plan like that. You can't plan with a currency that's moving that quickly. And this Treasurenet unit token, the concept is to create a fairly stable value. We're not promising that unit's going to go up to $20,000 or $30,000, but we're also saying it's probably not going to drop down by 15, 16, 70% overnight. And so things like that are pretty exciting. And those are the things that I'm really thrilled about with crypto. I think the other thing, and this is kind of maybe a little far-fetched, for a lot of your listeners, but there are certain projects like in Venezuela, which uses Dash, a lot of Dash. They have their own satellite when the power goes out. Why? Because the power always goes out in Venezuela, and they can still transact with Dash. Now, I don't know how well it works. I've never personally used it, but I know that they did it. And that's the kind of thing that we need in crypto, because we're entering into a time when power isn't necessarily going to always be on. Just look at what's going on in part of Europe with all the issues with energy and things like that. So we need a backup plan to that. And once we break free in that regard, I think crypto could take a whole new leap in terms of usability. But that's what I think. I don't know if you agree with me or not.
I definitely agree with you that the future of crypto is bright and that a lot of great things are in front of us, and that sometimes Bitcoin is a pain to use for a payment tool. But who knows? We are going to see what the future has prepared for us. But you have actually partially answered my question, and you mentioned only the positives, but I'm sure that...
the negatives. Okay.
Yeah, what are the negatives? I'm sure that there are some negatives for the last 10 years, yeah.
Oh, there are loads of negatives, yeah. Well, to a certain extent, I did answer a little bit of that, and that was the volatility is a very serious negative. Now, the volatility is a negative if you want to use it as a currency. It's a positive if you're an investor. If you're a trader, I should say. If you're a skilled trader, you want volatility for the most part. But I would say some of the negatives. The negatives are that the crypto space has attracted, it's been like a cowbell, if you will, a call for every crook on the planet to come feast and try to rip other people off. And there's been just, there've been scams for millions and millions and millions, if not billions, and then scams for hundreds of thousands, but lots and lots and lots and lots of scams. Guess what? Welcome to humanity. That's sort of the way things go in life. But crypto has been exceptional in that regard. I mean, even to this day, I cannot believe I'm still reading about hacked projects. I thought I thought the security had reached the point where hack projects were like, I think it was Mango from Solano, a decentralized exchange, got hacked for quite a bit of money. I thought they completely resolved that, but no, not at all. So hacking is still a problem. Of course, EOS has a way where you can get your wallet keys back through social verification, but a lot of other projects do not have that, and that's a real serious issue. And I think complexity. Unless you're really versed in the crypto language, it's going to take a while to get up to speed with what people are talking about half the time. Staking and DeFi and airdrops and all these things are basic to us because we're in the space, but to somebody who's new, it fries their brain. So I think there's perhaps an unnecessary level of complexity. The criminal element is still widely running around, and the volatility is bad. Now, I don't think volatility should be squished out. I just think there needs to be alternatives that aren't quite so volatile. And let's also talk real quick about the huge elephant or the Damocles sword that's hanging over our head. And that is, I'm not going to name any names, but some coins that are called stable coins where there hasn't been a thorough audit of the stable coins. And if and when that audit does occur and it verifies that they don't really have the funds they claim, because mathematically it's extremely unlikely that they're able to do what they've been doing, that could spell a real problem for the entire crypto space, a serious problem. That's a big issue. I'm actually really shocked that they haven't been audited to that level yet. But if it does happen and it's been shown to be somewhat of a fraudulent operation, crypto could go through the floor. Crypto could get cut in half overnight.
Yeah, absolutely. I definitely agree with you about that too, that there are also a lot of negative things happening in crypto, but this is normal. Like, it's not possible. Like, there isn't such thing in the world where everything is roses and positives. There are always some negatives, because actually these negatives help us to grow and become better and develop more. So yeah, I would be surprised if you have told me that there are no negatives actually. So it's great that you're mentioning these things so people can keep them in mind when they're entering crypto for the first time. So you somehow overtook my next question, which was more related to your project Treasurenet. So let's skip to the next one, which is like, what are actually the main benefits for people to start using Treasurenet?
Well, so Treasurenet is not fully launched yet, but any day now, in a couple of weeks, it'll be fully launched. The benefits are that you're going to be working with a unique protocol that is based on real world assets. So there's going to be an initial token minting just to liquefy the system, so to speak. But then the token production is going to be limited to the production of real world rare assets, oil and gas wells, gold and silver mining, even Bitcoin and Ethereum production, real world rare assets. And so there's going to be a very limited minting of unit tokens. So kind of like, Bitcoin is roughly 21 million, effectively probably 12 million, because a lot of the Bitcoins are just gone, but let's say 21 million. And part of the reason why Bitcoin is such a highly valued project is because of that limited number. Now, we're not limited to that low level, but we are limited to the production rate of these rare assets. And so the concept is that it will be kind of like a stable coin, meaning it's going to, go up and reach a certain level and then not vary that much. So it'll be useful as a base currency. That's the goal. The other thing is it could be at some point a great way to distribute yields because it's based on profitable real world asset production. So that's what Treasurenet's about. Treasurenet.io is the site where you can learn more about it, and it's built with very solid coding that's already been proved. Cosmos is the protocol, but I think it's an extremely exciting, and it's also something that the crypto space has needed, because basically all cryptocurrency is just existing in software. That's all it is. This is tied literally to physical production of assets for the most part. There is going to be some BTC and ETH, but generally it's tied to physical production of assets because every day all of us are using energy. And energy scales with economic activity. The more economic activity, the more energy used. Lower energy use, lower economic activity. And unit will match that production rate. So I think it's tremendously exciting. I think it's going to have a huge impact over time. And I think it may become, my expectations, it may become one of the core cryptocurrencies out there because it should offer stability with some consistent growth over time and value. That's the objective.
Great. Yeah, that sounds really exciting. But if I have to be fully honest with you, I'm right now not sure how exactly this will work, like how it will be connected with the real assets and how, for example, I as an investor would be interested to invest in something like that. What would be my initiatives actually, except the fact that you're saying that when there is a production in the real life, actually the amount of tokens will be changed. So maybe you can explain a little bit how the tokenomics are connected to the real world. Maybe our listeners would be interested to find out about that too.
Sure. Yeah. First of all, I totally agree with you. Without showing you the graphics and the white paper and the video and all of that, it all sounds good, but how does it really work? So there are two tokens. One is called TAT, which stands for Treasurenet Accounting Token, and then one is called UNIT. The one that you would use for transactions, daily transactions, is UNIT. TAT is strictly for the producers. When there are literally, oil and gas companies, or oil and gas wells, I should say, with a company that as it produces $1 worth of oil or $1 worth of natural gas, that issues through the protocol a TAT, one TAT. Well, you need the TAT for what's called a validator, basically, to bid for the right to confirm a block of transactions, unit transactions, which is basically what happens on all blockchains. There are bunches of transactions, and the miner or the stakeholders are bidding for the right to confirm those, and the ones that win get the payout, which is the block reward. And that's the same thing that happens. It's a proof of stake consensus protocol. But the difference is that you require TAT for that transaction. The TAT only comes from the producers. So if you don't have very much TAT, you're not going to get very much production of unit minting tokens. If you have a lot of TAT, which means a lot of oil and gas is being produced, then you're going to be able to get more unit block rewards. And that's the linkage. And it's really best explained with a graphic, but you get the idea. And so this is legitimately tied to oil and gas wells at this point, and it's going to expand and all the tools. So this is a protocol, meaning it's designed for open source people to go ahead and join as a producer. Let's say you've got BTC miners or ETH miners, or you have gold and silver assets, or you have oil and gas assets. You can join, you can get your assets tracked by the protocol, which is all done automatically, and it will issue TAT, and that will add to the number of unit being produced. And it's an open source protocol, which also includes the ability to distribute potentially at some point. It's not built in, but I'm just saying that open source capabilities exist for distributing yield and doing all kinds of things. So it could be a big DeFi application. It's all the tools are there for it. So it's essentially imitating gold and silver for modern day use. Because gold and silver, the mining of gold and silver, other than when Potosi was discovered, that's the one big exception throughout history. For the most part, gold and silver basically track economic activity. That's why gold and silver kept inflation at bay for hundreds and hundreds and hundreds of years. And that's kind of what Treasurenet is oriented towards doing. So hopefully that explains a little bit about it. And I do want to mention real quick, I don't know how much time we have left, but I do want to mention real quick, I still have an advisory. I put on my screen the Telegram link up if any of your listeners want to communicate with me or find out about my advisory. It's on Telegram. It's coinpicker.us, and that's coinpicker, PICKER.us. And they can just contact me there, and I'll let them have a look at the advisory and see if it's something that they're interested in. But basically, I track all kinds of different projects, new projects, existing projects, and I tell people, great time to buy, great time to sell, look out for a market crash ahead, or we're about to get a big move up. That's essentially, the way that I make money in the space is those kinds of calls. I don't play the game of saying, well, it's going to go, it's going to go from 19,000 up to 22,000. I don't know that. All I can tell you is it's going to go from 19,000 up. And, I can tell you when it's getting to its peak. I'm not a fortune teller. I can't tell you exactly how high it's going to go at a certain point.
Yeah, what you're saying is definitely connected to my question, which is like, what do you think are some of the biggest mistakes that crypto investors are doing these days?
Well, that is a very interesting question. I'm going to go ahead and say I will not call it, for them, a mistake. By my perspective, it may be a mistake because I have my own way of trading, my own way. I am not interested in losing money. I am not interested in holding past a certain period of time in the hopes that that particular market goes back up. Because if you do just the raw math, when you take a hit from 65,000 down to 19,000, or as it was in the past, 19,000 down to 3,500, when you take that hit, you have to wait a long time before you ever get your funds back. And your ROI on that yearly asset has just gone massively negative. So the biggest mistake I would say is that a lot of crypto investors are not willing to take a profit. That is the biggest mistake, I think. You've got to be willing to take a profit and then sit back and wait for another good opportunity. If you think that the crypto space is just going to go up and up and up for all of eternity, and you're willing to sit in through these periods where you lose 40, 50, 60% of your investment, fine. That's certainly your prerogative. I don't like to do that. I don't do that. In fact, every single major call that I've made has been getting out or getting in at these massive hot tops or these massive bottoms. And it's been enormously profitable. I mean, imagine selling out, you bought in at 1,700, you rode it all the way up to 19,000. Then you sold out everything and bought back in. And these are public calls I've made. I've sent out emails saying, everybody back in the water. 30,000, 3,500, you ride it back up to 60,000 and then you sell out. And I mean, the amount that you multiplied your wealth versus holding on to it and losing is the difference is night and day. You're talking, legacy wealth versus losing your shirt, basically. So I don't think crypto has reached the point where, I know crypto has not reached the point where you're looking at stable returns. It's still going to be a volatile market because it doesn't have a firm limit to the downside and it doesn't have a firm limit to the upside. So it used to be a strictly long biased market. There was no ability to short the market. Now there is the ability to short the market. So with that dynamic now changed, you have to be more careful. You have to be more nimble. But I would say the biggest problem I've seen when I was advising a class of people and lots of people, I couldn't get them to sell out at the top. They wanted more. They wanted more profit. And I was slamming the table, sell. Lots of them didn't. And they just lost huge money.
Yeah, so I think that you're one of the few people that I'm hearing saying something like that. So I'm really curious to hear your thoughts about DCAing. Because I have a feeling that you're somehow against that. So can you share more about that?
I'm sorry, hear my thoughts about what?
Doing DCA, like dollar cost averaging?
Dollar cost averaging. I don't have a problem with it. I think if you aren't interested in trading aggressively and monitoring the market, then dollar cost averaging is the way to go. Now, here are a couple of things that could get in the way of that, in my opinion. Crypto rose during one of the most aggressive monetary inflationary periods in the history of the world. Now we're looking at monetary growth slowing or even going negative in certain regions. And the assumption is that the central banks will reverse course when the pain gets too great. That is almost always the correct assumption, except when you're entering a currency regime change, which is what we are entering. Now, I don't know exactly when, but the signals are all there. They want to force us onto digital currency, central banks' digital currencies, things like that. And they're going to do that at a new evaluation of $1 to gold or $1 to a basket of currency, which is just complete idiocy to do it that way. But of course, that's what they do, complete idiocy. So the answer to your question is, prior to this phase, dollar cost averaging was obviously a pretty good idea. Most people are not either going to have the patience or the skill or the discipline to accurately pick bottoms and tops. If you can pick bottoms and tops accurately and ladder in and then get back out quickly, you're going to trounce the person who dollar cost averages. Trounce them. I know, because that's what I do. If you're not willing to do it, and I totally understand why, I get it. For me, this is an obsession. I don't watch sports. I love the investment world is my sports. That's what I love to do. When I get a prediction correctly, and the majority of the time I do, to me, I've scored a touchdown, I've scored a football goal, I've hit a home run, I've knocked the other person out. That's how I view it. But in any case, so dollar cost averaging, I think, is a very reasonable approach for people like that. But you really have to consider that we're at a historical changing point and that things could really flip hard where there's a liquidity. For instance, Credit Suisse could go under. In fact, it should go under. But when that happens, that could cascade to Europe and then eventually the United States, and liquidity would soak up, disappear like crazy. Bitcoin could drop by half like that. Where are you with your dollar cost averaging at that point? You've just, you've been wiped out. Whereas a person like me, monitoring whether something like that's going to happen, and I'm not going to be anywhere near it. I will have sold everything out. So that's the only issue I have. The dollar cost averaging person assumes that yesterday is going to be pretty much like tomorrow, or, basically that things are going to just steadily improve. At this point, that's not necessarily a safe assumption. That's what I would say.
Really interesting. I think that you definitely have right, but like our listeners, they have their choice to decide which one works most for them. Like if they are choosing your way, this means more time to put in analyzing, researching and things like that. And I doubt that most of them have this time.
Yes.
Except if you are full-time in crypto, like me and you,
yes.
Even though you have a lot of Web2 businesses, but that's another topic. Mm-hmm. So we are running out of time, and I'm really excited to ask you a question that I'm asking all of my guests, because it's something like, how to say it, intellectual property for our podcast. Okay. And that's the question, which goes like, how do you think a person can do more investing rather than gambling in crypto?
Well, I like that question quite a lot. I would say that dollar cost averaging is more of an investing approach in general. And two aspects to that. One is dollar cost averaging, which is what you recommend. Two, the other one is if you can get involved in staking for yield in a variety of different projects where you're not necessarily depending on the market to continually go up. You're already getting an 8% yield in some vehicle, whether it's a Uniswap or a PancakeSwap or whatever token you happen to be involved in. That is one way that looks a lot more like investing, because what I'm doing with some people that I guide is I make sure they're in high dividend paying investments, energy investments, mining investments, things like that no matter what the market does, they're getting a yield of 7, 8, 9, 10, 11, 12%. So that looks a lot more like investing. That's one thing I would do, because we're at a kind of an interesting point. Bitcoin has not gone down very much, hasn't gone up. It's kind of in a stable zone. And that's where your yielding investments are going to pay much bigger than they would typically. If, in the market where Bitcoin is constantly sort of edging up, that 8% yield doesn't seem very significant. But in a market where Bitcoin is trapped between 18 and 20,000, yeah, that's a big deal. That's a really big deal. So that's what I would say.
Nice. Okay, so my final question for you in that case is there anything else that you think our listeners should know about crypto investing, but we haven't mentioned it so far?
Haven't mentioned it so far. Well, I'll mention this because I might come up with a good answer later on. But if you want to find me on Telegram at coinpicker.us, join on the channel and I will be happy to fill you in if I come with a better answer. But I would say that crypto is still an exciting space. We're still very, very early. I mean, lots of people said, oh, all the money's been made in crypto by 2017. How completely wrong was that? The DeFi space exploded. NFT games exploded. And NFTs are a whole nother area. I was involved in an NFT project. I developed one called Pip Idea, basically where you could create your own NFTs. But NFTs, even though the market has been hurt a little bit, it's going to take over all the centralized record keeping of properties and everything. It's going to eventually take over. So the opportunities are just beyond reason huge. It's really going to suck the government out of all kinds of different things. So I would say that's the one big message is there is still huge opportunity in crypto. Don't turn your back on it. As long as the power's on and we have some internet, which I think we're going to have all that solved. Crypto is really going to take over basically all the administrative duties of the planet that have been left to governments and things like that and big, huge institutions. And how exciting is that? It's the best thing ever. So
amazing. I think that this is a great final for our episode. So thank you very much again for joining my podcast, Mark.
Thank you so much, Polar. I really enjoyed it, and I look forward to talking to you again sometime.
Amazing. Yeah, I'll make sure to include all the links that you mentioned in the show notes so our listeners can contact with you or check the project that we talked about. I mean, the Treasurenet project. So thank you very much again, Mark. It was an amazing pleasure for me to have you here. And thank you very much to all of our listeners that have reached this point. So if you enjoyed the episode, subscribe, share with your friends. A lot of great things are coming. In all cases, I'm Power, the CMO of Seasonal Tokens, and I'll talk to you on the next episode. Bye.